Morning traders, welcome to the Traders Lab. I'm your host Tom B. Can I please get a screen and audio check in YouTube and the Discord? Trader Lab. Morning traders, welcome to the Traders Lab. I'm your host Tom B. Can I please get a screen and audio check in YouTube? And how we do it in YouTube today. Good morning, Marty. Thanks, Tony. Well, good morning, everybody. Thanks for visiting the Trader Lab today. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. And this is based on structured trades that you can download and look at samples of them, but you do need to reverse engineer them in order to fit them into the time frame that you find that you can vet an edge with. Everyone is different. Some traders trade higher time frames, others are trade short rotations. The solution lies in the metrics and how you can over time generate a yield in spite of the stops that we all take. This is not a business of being right. It is really a business of statistical probability and then dealing with your emotional state and the primal wiring of wanting to avoid risk and search for certainty. However, we're not in the business of certainty. We are in a business of maybe. Now we have the potential, it looks like, that the government shutdown potentially is going to end, and the market seems to be anticipating that. So let's see what the market offered today and how you might have participated or still participated in it. Let's see if we can get things working here. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. However, if we get into real time, we'll discuss it. Also, there's a library of webinars and a document section that are available to everyone. The Trader Lab is open to all of you. There is no cost for it. It is part of the Bookmap ecosystem. Now, a reminder, Bruce has his pilot program if you're interested in extracting a trading edge, and of course this is a business of edge. You might want to visit that in the Bookmap server. Check it out. You have to apply for it, and it's open to all Bookmap subscribers. In this stream, I talk about a very simple process. Now, the process is simple, but the market behavior is random. So we need a structured process or anchored inputs in order to create consistency in how we operate in the market. The market is random. So similar to casinos, we have to have anchored inputs. So this way, the inputs are constant inside of a random environment. So you can measure the outcome of anchored inputs. You cannot measure random inputs in a random environment. I hope that makes sense. So how do we dissect the market? Well, we need to understand the market's is an auction looking for pricing, and that's why we have a market. What's too high, what's too low, what's a fair price? We can see this behavior using a tool called the volume profile. It's not an indicator. It allows us to see price and volume because all prices are not created equal. Those of you who just look at price without understanding the volume at price. Now, this is not the volume that you see when you have a vertical bar of volume that is time-based. This is really a horizontal representation. So each price on its own shows its volume because let's say the price is too high. When you go shopping, there's not going to be a lot of volume up at a high price, though there will be some. Volume will slack off. So it's the kind of thing that all prices are not equal. What is the time frame you change that trade? That's the rotation. Some traders are going to trade intermediate time frame. Others are going to trade very short time frames. And it doesn't matter what time frame you trade. What does matter is that you can get risk neutral and you have a statistical edge that can net you a profit over time. Context is what's the condition of the market. This is the highest order of priority to get in alignment with it. And again, that's subject to time frame. So overall, the trend might be up, but you might be taking shorts in the market. And all of it is okay because that is time frame specific. So you need to isolate the rotation you operate in and then vet it. Bookmap's the order flow tool, of course, that we use to interact with the market in the shortest time frame. Now, there's 60 PDFs of structured trades that you can download. This is not a trading course. There's no cost for this, but I was getting asked by traders many years ago, what are you doing? So I just threw some of these together. It was never intended to be a course, but it can give you some ideas, but you have to reverse engineer everything. Also, I was doing research with Bookmap on some add-ons. As you know, with research, it's only as good as the research. Some of this was incorporated into current add-ons, and most of it gets thrown away. I don't use any of this anymore, but a lot of these structured trades are still what we do in Trader Lab, and you can look at them. But it's not plug and play. You know, the thing for most of us is we're looking for the, quote, holy grail. These are actual trades I took. Others are just screenshots. Again, there is no plug and play. If you're interested in Trader Lab, be sure to use the link in the bottom of YouTube and visit. Now, let's get out our context grid sheet. This is the first step, and this is in the document section as well as a library of webinars. We had a huge gap today, and again, I believe this is news related about the end of the government shutdown, and I don't know at the moment if that's been resolved. It's not our concern. Our concern is alignment with the market. The market is opened at a range in a large gap. So what does that mean? It means the market's out of balance. So the first thing we have to do, are we getting selling initially on the gap? That would be called responsive selling. In other words, traders are responding to the gap and they're going to sell it. Or do we get continuation buying? Well, initially we get buying. So the market is not responsive. So that means there's an impulse move. And if that is, that means you trade in that direction. So then are we continuing to drive? Well, if yes, then it's a possible trend day. So initially, we're going to start on the long side. So let's go take a look at these trades. And by the way, if you have questions, please ask. I'll do my best. And if you're in YouTube, hold on one second. Post your questions. I'll do my best to get back. There is a bit of a delay. Trader Lab, same. So let's take a look. So this is the RTH Open, 8:30 Central Time. By the way, I'm in Chicago. I got back just in time for some snow. How exciting. It was much warmer in Mexico. So I'm here for a few weeks, and then off I go again to Costa Rica. So now I'm back here, and of course, trying to get everything to work over here is a bit of a challenge. So spent many hours yesterday trying to get everything functioning. It's strange how things can get so scrambled just by going away, and then the computer's going, what are you doing here? So this is RTH Open. Now, we have our ETH high here, which has a high probability. So we're looking now, since we're in a huge gap, we're looking for the potential for the market to go higher. Now, the thrill, of course, is where do you get long? That's always how I think about it. How do you get long? So let's go take a look. This is called VPOC migration. And I made this up, and all it is we're looking at the volume. Now, when the RTH opens, there's no volume, right? So the green delta represents aggressive buyers. Now, buyers can be buy stops, or it can be, so a delta is represented by market orders. Stops are market orders, and initiators are market orders. So right here, we see some selling. Now, remember, if you were long from Friday and you have this kind of gap, what might you do? You might take some profits. So that's why it's important that we might get, and they would be responders. So when you get this kind of gap, you have to be very careful that you might get some profit taken. Either we do the Acapulco cliff dive and everyone goes, oh, you got to be kidding, or we want to get continuation buying. So in this circumstance, we're looking for buying initially. So let's go take a look at what happens here. So right here, I'm seeing my selling. I've got my VWAP and my mid. My developing volume point of control is below. Right now, this is saying too high. I'm going to label this, and I follow process. Remember I was talking about anchored inputs. If you're a developing trader, structure, you can codify structure into process. And if you can create process, then you can do an if this, then that conditional statement. If this, then that, if you were building a trading system, and this is kind of how I built systems years ago when I was managing funds, and I had to come up with conditional statements, and it was branch logic. So if this is too high, then lower. If this is still too high, then what? Then lower. This is responsive selling. However, I'm not interested at the moment in shorting this yet, but I'm waiting because I'm thinking part of my brain is going, well, maybe you should be selling this. So I have to give it some time. RTH open is here. This is too high. This is now the retail price. This is shopping. There's more volume here than up there. That says this is a fair price. That's too high. Language. No indicators. It's language. Now watch. I get my buyers right here. This is too low. I break out, and this is very aggressive buying. So now I have to get long. And it's, oh, great. Where am I going to get long? Let's go take a look. This is support here. First target is ETH high. For me, nothing to do. One moment. $68.24 is a naked, up here around 25 is a naked volume point of control. That's a former retail price. We are going through the liquidity here. This sweep, depending on your skill, right here, is a possible long entry. I didn't take it. I just want you to know. Hold on. Overnight volume point of control should be below us someplace. Maybe not. I think I lost it. Guys, where's the overnight volume point of control? It's about 15 3/4. So about around here someplace. I think it's covered up. Okay. So we have a sweep here. Sweep here suggests counter rotation. Now we have this liquidity is possible support. You can see it come in here. We have the mid and the VWAP. VPOC migration. This is saying potentially too low. This now is the developing retail price. I have a low volume node here, and the first potential long is setting up now. So we have VWAP mid. This is VPOC migration. Says the language of the market is this is too low. This is too low. This is an outside edge. So this is my first opportunity to get long. VPOC migration. So this is my first long. If you can dance in midair, this is a long. That wasn't my long. This is my long. This is an ad, and that's that. So now longs. Now, VPOC migration. VPOC migration. So longs, longs, longs. And this now is an upward distribution. So the idea of this now is if the trend is up and we have initiative buying, then the possibility is for mean reversion, which is outside in trading. This is qualified in this condition. We come down, we get a sweep into liquidity. We have a structured trade in the Trader Lab. It's either VWAP to VPOC or mid out in this area, and here's our VHVN. So let me explain this one. Now, the thing is, trading is not mechanical. Trading is areas. So here's what we have. Liquidity, sweep, VWAP, mid. Now, what do we know here? Thanks, guys, for the overnight VPOC. Thanks, Stephen. Well, I don't know if the computer's enjoying the time off, but I'm having some difficulties here. But so I have more hours to spend trying to fix it, which I will later. So sweep here. So this is setting up. So here's what you have: an outside edge, which would suggest reversion trading. We have high volume here, which would act as a support area. But what we have that's important is the mid. Now, I have a philosophy only from experience is that I find that I will get buyers in here, but I have an outside edge here. I have the ETH high, which can also act as support. I've got VHVN, and I'm going to have stops at the mid. So this, for me, if I get long here, my stop has to be under here because this is my protection. This is now too low. So I got this, this, this. I do not get long here, or if I do, I should say I'm not putting my stop there. That's just like giving it away. I have to be outside because other traders are going to have their stops at the mid. So let's look. I'm looking for a trigger now. Let's look at the trigger. So this is your trigger. This is your sweep. And this is vulnerable. Watch what happens here. Remember where my stop is. It's out here. Not saying it's a good idea, just saying it's an idea. There's another sweep. If you buy this and you put your stop here or right here, what are you inviting? To get stopped out. Why? Because there's stops under the mid. And does that mean that it won't go here? Absolutely not. So when you are putting a trade on, now this is a good entry, except the location of the stops, retail trader behavior. So and look at the iceberg buying into those stops. So this liquidity, those are limit buyers. The stops going off here, there's the delta, sell stops, they're getting absorbed. This is one of the ways you need to anticipate. And where's our outside edge? Don't forget, low volume node, ETH high. The high of the day, as you know, or any high or low, is material. And again, it's not about not, being right. Anyone who says, who pounds their chest about being right is really immature when it comes to this business. It's really about understanding market mechanics, putting your risk on, and then it's random. So you need to understand in your trade plan, it is not mechanical. You have to think like a retail trader, but not act like one. A retail trader is going to have their stops under the mid. If you get long here, if you put your stop there or there, in my opinion, you're potentially throwing your trade away. So this is the long. Remember, if you got long here, fine. If you waited for this, long. You can get long there. You can get long there. This is, if you got long here, your stop has to be under the VHVN. If you get long here after the mid, much better. This is your sweep. There's the sellers are there, and this is entry trigger here, and you're going for this for your scale. This is mean reversion, stressing the mean. And this is your scale. So whether you got long here or here, this is your scale. Is everybody tracking? Now this is reversion trading. VWAP. Now this, subject to your plan, in an uptrend, could be a long here to there. This is something you have to vet. Do you take the first one in an uptrend or this one? Is this too low? And now we're going to check too high. This is also a potential long if you vetted it. This could be an ad. So let's look at this. Long here, stop under here. Long here, stop under there. Scale there, holding. I'm only going to talk a 2 lot because this is the minimum configuration. You can go way beyond that, but we're going to start somewhere, right? This is a long. Scale there. Now you have 2, and then whatever. Now, here you have a sweep. This suggests the possibility of a counter rotation right here. Same thing as there. You need to be looking back what happened here. So we know these guys got absorbed up here. There's a sweep. There's the longs, there's the target, there's the long, there's the target. This is okay if it holds this, and you do want it to hold this. And now we come up here. And the idea now is to take out the first hour's high at 9:30 Central Time. So far, we're still in a long configuration. How we doing in YouTube? Okay, so here looking for range extension at 9:30 Central Time. Range extension means taking out the first hour's high, in this case the IB high, but there's a 90, hold on, about a 90-ish% probability. Past performance not indicative of future results. About a 98% probability to take out first hour's high or low. Since we're out of balance and we're going north, this is what I'm looking for statistically. This is our variable high volume node right here. And the idea would be to try to stay above the bottom one, which is this one here. So we have this. So the way I look at it, and all I try to do is try to align with it. I don't know what it will do. I just follow it. So this is too high. This is too low. Long to there. This is support right here. You see the absorption. If we clear this, then we're looking for that. Okay. So this really, and back here, so far, this is okay. Now, if it comes outside, we still have the potential for reversion to there, and out the top, okay? So, we come outside. This is my outside edge. So for me, I'm looking at this. I also know I have stops under here. So getting long against this absorption and the mid, you take this long, this is pretty aggressive, and you got to scale here again. It's still a reversion trade. Okay, it's a reversion trade. So you're still outside and you're looking up here. VPOC migration. Looking good, Lewis. So far, we are holding the long side, but we have to get out here. So 9:30 Central Time, 5 minutes from now, I'm looking for this. High probability. Back to the VWAP. So I'm holding the longs, scaled out, no problem. Now we come down here. The outside edge, again, is going to be down here. So now we get these stops, and then I get taken out. So now, looking again, going, well, that's something. So out here now, I'm going to be looking out here. And it just keeps going. So now I take out the first hour's low. Now we have to go to our context grid sheet. Is the market responsive? Yes. What do? We fade the gap back into balance. So we have to watch for a test lower. So we're now below the overnight volume point of control, and we break low. This sets up here something called the IB continuation trade, and you have to remember we're responsive, but we're in an uptrend. So it kind of makes things challenging. I'm trying to remember where I got in this thing. Hold on, I gotta go take a look. I think it was here. I got a short on here to the overnight mid. I gotta go look. Hold on, guys. Gotta look back. One moment. Where did I get this thing? 951. Yeah, here. Well, it's not really material. I got a short here at 951. I look at some of these things and I go, how did you do that? It was here. Because I know the stops are under the opening swing low. So I took a short, got scaled, and then I went to the overnight mid because that's my next target. Just take them, and I take things sequentially. That was that. That's the last trade I had for me. Now I think there's another one here. Yeah. These are not necessarily trades anybody ought to take. These are more micro oriented. This consolidation here, this volume, coming back and checking it. This is a short trigger, but these are not really trades I would say that anybody ought to be doing. Because you got your statistic. So now it appears that we are now coming back in. To get back in this, we have to get above the IB. So what you can see is if you look at this, what we've done is we've broken out of this upper distribution. Now the possibility is going to be to work with this. It's tricky because the trend is up, and that was responsive selling. So it's going to be two-sided, and this now is your outside edge. So we have to see the behavior when we come back up here. Do we just push through all this? So stops are going to be above here. They're going to be out in here. So the possibility, and this is not a recommendation because I'm kind of conflicted on the thing, is that what we had is, think of it this way, big gap, additional buyers, responsive selling, the late longs get blown out, and we have sellers from Friday. Now, if we find our buyers again, then what might happen here? Right in here, if we can't get back into this distribution, then we can do this. We can rotate to the south side. Or if we push through, then it's game on for the long side. I can't tell you which one. I can tell you that that is the way I would look at it. Because what you can see here in the profile is too high. We ran out of buyers. Only 61 contracts went off. And now we have something called a low volume node over here. So this is like its own distribution. So when we were trading the longs, it was outside in. Remember the mid and the VWAP. You break down and now you have volume here. The possibility is to stay in this, but we're in an uptrend. So this is a very mixed bag. And our highest volume is up here. So either we're going to return back here and maybe come out the top, or we're going to spend time down here, and eventually this volume point of control, which is the highest volume, think shopping, retail, will come down here. And I can't tell you which one. So you might just want to hang out in your Barca lounger and just wait for more clarity here. Because there's two sides. What we have is two-sided trading. We had our initiators in the morning. We have our responders now, profit taking. And now the question becomes, if the market comes up, are we going to invite more sellers, or did we just blow the longs out from this morning and the longs that were long from Friday's reversal? And now the buyers come back in. I don't have the answer, so we have to wait and see the behavior. You guys have questions? By the way, if you're visiting in YouTube, the Trader Lab community is available to all of you. There's no cost for it. There's a link in the bottom of YouTube. There's a library of webinars, the Trader Lab community, as well as the document section. It's about all of us working together to create something better. This is important. Let's watch and see what we get here. You always have to look left. You want to see where the stops are and the behavior. So we have full session VWAP, VWAP, and mid. So let's take a look. This is an important area. Overnight volume point of control is here, and these low volume areas. So whatever, and this is some pretty good buying. So I would, I don't call trades, but for me, I'd just be very patient. I don't have a sense of urgency or FOMO. I'm actually at the opposite end. I'm very patient. And if I am conflicted, and right here I'm conflicted, then I just wait, because there's always another trade. My thing is, if this, then that. If not, then what? Well, do I run in here and fade this? No. What's the higher time frame? Up. What happened here? Responsive selling. Are we going to get our buyers in again? Well, looks that way, doesn't it? So I don't assume anything here. Here's what I see. I see the buyers. I see the delta. So I have nothing to do. I'm only talking about me. It's not a recommendation, because I'm not going to sell it. I'm back inside the IB. This is called the IBF. This is a reversion trade. It sets up a potential long to come back here. Not a recommendation, because we can just get in here and then roll down. So the higher time frame trend is up. This is called potential IBF. Now, this is extremely conflicted because you've got this. So, because there's going to be stops here, right here, and subject to this is just very key. And I consider this pretty high risk trade because of its location. In Trader Lab, this is called the IBF, but it's just a conflicted location. Higher time frame trend is up. If this trade works, and it's just one of thousands of trades you take in a career, the goal is to come here and potentially come out the top. And it's not a recommendation. Let's look at this. So this is a bit, I'm going to say challenging. If you take the IBF, you must get risk neutral. And then your goal would be to get here, because this is a reversion trade and this is funky, because of this. If we can keep pushing through, then you're going for this. This is the reversion. That's the mean. If we get past that, then that sets up the potential to come out the top, and we would have a neutral day. And that's not a recommendation. This is just what it might do. Nobody knows what it's going to do. So let's see what it does. What's important to look at here is we have two distributions of volume. Sellers from here, buy stops are above here, and this is a low volume area. We could just chop in here and either fall out. And so here's what might happen. Return there or return there. The higher volume is here, and the higher time frame trend is up. So that's the drill, and it's not a recommendation. I consider this, this is like any trade, but structurally it's got a little mush right in here. That's a new trading term, mush, because this is really what separates these two distributions. So either this is too low or this is too high. When I see this kind of buying, I'm inclined to be thinking the long side to come back here. And like any trade, this still is a funky area. So you just and there's a sweep. That's a just potential downside rotation. And we might just, when you have a low volume like this, we might just rotate and fill this in. So again, I have no idea. So if you put this trade on, you have to get risk neutral. That is the primary job. So we'll see what it does. And it's not a trade recommendation. This is a tough one because you've got to enter really well. And this is a problem. We have to clear this now. So here's our VWAP. We have our mid down here with our stops. If it comes out here, you're in this tough zone. This is a tough zone because it can just do, it could just operate in here and auction this area. So we'll see what it does. If you guys have questions, post them. Well, I'm getting a question in YouTube. Is this a mean reversion? Well, it can be, but it's It's problematic here because of this low volume zone. We can chop in here. That's the thing about low volume. I'm inclined, and this is not a recommendation, to be looking for it to potentially return up. But this is a, let me just say, disturbing because we can just do this in here. Stops are at the mid, so we want to see what happens if we can get under the mid. Okay, let's watch this outside. This structurally is very messy because of this, because you've got too high and at the moment too low. So we may just do this and then decide which way to go.
Yes, sellers at 6,813.5. Yes, sell. Size 276.
Let's see.
Sweep yes, sellers at 6,813.5.
Got to look left. Very two-sided here. Okay, let's take a look out here. Sweep.
Sweep yes, sellers at 6,813.5. Yes, sell. Size 257.0.
Sweeps.
Yes, buyers at 6,813.5.
We have to see if we can clear this IB again and get above here, this sweep. We can clear that sweep, it might open the door for this. If we can't get out of here, then it's going to roll down to that side. So there's two possibilities. It's this or this. And I couldn't tell you which one. And the problem with it is this. So chopping in here. What I do see is this, which is some pretty good buying. So then we just have to see if we can continue, if these buyers still want this. And if not, then down here. So we'll see. So this is your exhaustion in your rotation. Now we have the sweep on the other side. We need to get over these right here, these sellers. We can't get over these guys, then chances are we're going to come back here. It's not a trade recommendation, doesn't have to do anything.
Caution, lunchtime chop. Caution, lunchtime chop.
We have to see now if we get back to the high volume below us.
Yes, sell. Size 233.0. Trade EST 5 CME at PM light sell 225.
So the HVN down here is sitting around 6,800. That's where this might go. Hard to say. We're in this low volume area. It's just going to be choppy in here. If you don't have a plan for this, you're better off just hanging out.
UPS sellers at 68.10.
Be careful not to start flipping like a flounder on the dock. This is a tough area because of the low volume. Markets tend to rotate in low volume and fill in an auction. So you could really get spun around in here. If you do take a trade in this and it doesn't work out for you, just manage yourself and don't start flipping, because you could do damage because the market can just chop in here for a while before volume builds up and it fills in. I don't have any kind of for me, it's both sides right here. I can trade either side here because I know I'm in a critical place. So the long made sense to me. The sweep put the kibosh on that. And now we just have to see if we can, which side we go to. Do we go to 6,800, come back, or do we eventually come back and go to VPOC at 31? It's going to be probably one or the other, and I couldn't tell you. It's not my job to tell you because I don't know. You're asking me, you're new to Bookmap? Yeah, go to bookmap.com and watch the videos. This is Stop an Iceberg, if that's what you're asking me about. I'm not sure. But these are the icebergs. These are buying icebergs. These are sell stops. You'll notice the liquidity was here, the heat map. That is resting limit orders in the book, and those were the icebergs. And when you get the sell stops coming out, that's liquidity. They're market orders, and they are passive orders, so they're limits, so they're taking the other side. And you have a sweep that suggests the potential for a rotation. Now we have a sweep going the other way. We need to see if we rotate here or if we keep going up. Again, the problem or challenge is this, to fill this in. So we'll see. Hard place to trade.
UPS buyers at 68.40.
You see how it's operating here? This is where we had our sweep. We have a sweep here. We have sweeps on both sides, and we're in this zone. This is chop. And this is a hard place to trade, guys. And we have our IB. The thing that's more important than having this is this. The volume distribution supersedes a line on a chart. So we can just be doing this in here until it resolves. This still might be where we're going, but we could just as well, if we fall out of here, come down here. It's really right here. Now, the thing to try to keep in mind about this is the higher time frame is up. So it kind of leans this way, but it doesn't mean anything. You know, it leans that way, and there's less volume here. So, but you'll notice we're just auctioning inside this. So this is a harder place to operate, really, because it's going to resolve one way or the other. Trend is up, so It kind of leans a little bit this way, but we could just as well fall out. What kind of suggests the upside here is the buying there. So you look at that and look at this here. Heavy selling and the absorption. So we have delta divergence here. There are a number of things that suggest the upside. So, and it's not a recommendation because I think it's at this point, like every trade, it's random. The evidence does lean to the upside, but it could just as well fall out.
Sweep ES buyers at 68.16.
I'm getting a question, how do I determine that the trend is up? Well, huge gap that we haven't filled. We shook out the weak longs. Aggressive buying over here. And if we can get out of here, then there. So that's why the trend is up. Well, it is a reversion to the mean day. My favorite setup, Andre, I would say the condition that's most common in the market is called mean reversion. That is always reverting to the mean in all time frames. So my favorite setup, let me put it to you this way. It's more like what behavior can we recognize and what behavior happens most often? A reversion to the mean in all time frames. If a trader takes one trade and makes it their own, in other words, you can teach it to somebody else, you thoroughly understand it. This trade here shows up most of the time, and it does it in multiple time frames. So this is the mean. So now what's difficult with this one is this, okay, this thing. But if you think, and here's the thing about the uptrend, you see that buying? That's aggressive buying. So if I know there's aggression and we left this high volume right here, that might be saying, I'm always going to say maybe, that this is too low. This is sellers, buyers, and then the buyers take control. What happened to these guys? They're under the bus. What does it say about this volume? Maybe it's too low. There's my buyers. Now I'm looking for longs, and we have a trade called the IBF, which is a reversion trade. Highest volume is there. So I'm kind of thinking that when I look at it, other than the problem of this because of the low volume, which if you understand market mechanics, you would get a sense that this is a problematic location. And what we did is we're operating and we're filling it in. Now, this is not a recommendation, but this is the target. Now, you might get thrown under the bus here because of the low volume. Remember, guys, when we talk about low volume and the auction, if you run away either side and you leave low volume, the market has a tendency to come back into it and auction it. That's what's going on here. So this is a tough area. If you think we're going there, you'd put a long on. If you think we're going there, you put a short on. I'm leaning towards the long side. It's not a recommendation. I take stops. I couldn't tell you what it will do because nobody knows what it'll do. It might go here and it might go there and it might just stay in here and chop until it resolves. That's all I can tell you about it.
Yes, sell, size 281.0. Sweep ES sellers at 68.30. Yes, buy, size.
Is there a significance to the pullback low in ES 67?
Size 231.0. Trade EST 5 CME at light by.
I'm not sure what you're referring to. For me, the short target was the overnight mid After that, that's as far as I went with my short. Because of this gap, the likelihood of filling this gap is, shall we say, not high. So I'm not sure the question. So we have to see now if we can get back here, which would be the primary target. If and assuming you can get scaled, if you are trading the long side here, this is remember a funky area because of the low volume. We are trying to get here. You need to manage your risk, get risk neutral. You start just mechanically buying the IB for the IBF and ignore this, then you have more work to do. Think of it like this. This is an outside edge up here, and this is the outside edge to go down there. We came down here. We tested this edge. Now we're up at this edge. You see what it's doing? It's between these two edges. We have to get outside of this, one side or the other, to resolve. The buyers were aggressive, so the inclination, at least for me, and it's not a recommendation, is to go here. It could just as well fall out. So there's no way to know which way it'll resolve. I would suspect, and that's all I have, that this is too low because we had our aggressive buyers. So now it sets this up. So, and it doesn't have to. It could just come under here and just chop. So that's it. There's nothing else to do except if you have a trade, if you think it's going up, you get long, you're going here. If you think we're going to fall out the bottom, you're short and you're going there. And that's that. For me, again, I'm not making a recommendation. I take stops. It's longs to there, out the top, this, and then maybe up here. This is my next target, is there. And there's possibility to go further, of course, but one step at a time. This is not easy, this one. Not that any of them are, but it's very important you guys do screenshots so you don't get hung up on, this is a time-based line on a chart. Time. For me, it is structural, but this supersedes it. You need in your trade plan to be looking at the distribution of volume. What does this say? This is your short side trade. This is your long side trade. This is nowhere. This is chop and rotation area. Does that make sense? Can you kind of see how the profile gives you a sense of where it might trade? And this is called, I was asked what my favorite quote setup is. Well, there's a little more to setup in the sense of, I call them structured trades, because setups, if you will, are only qualified if they're aligned with the condition of the market. And so my favorite trade is the reversion for developing traders. Now, there's a whole basket of trades that you can develop, and they're in that 60 PDFs I share in TraderLab. But if a trader can't vet and develop confidence to execute one trade and become profitable with it. Now, it doesn't mean one trade a day. It's a condition. If you cannot recognize a condition and know when it's qualified and know what does it take to get risk neutral, so now you're trailing or managing however you vetted it to go here if this is a reversion trade. So with this trade, the idea is if you get long, to get risk neutral. Now we have a sweep here. That suggests an upside rotation. My resistance is right here. Look where we went. I have to get above this resistance, which came from here, to go there. If I can clear this, I have a shot to come there. That's the trade. Let's see what it does. This is the mean reversion. And the joke, of course, is, yeah, it's mean. I like to say that only because the hard part with mean reversion is where's the outside edge? You know, is it there? Is it here? Now, by the way, and I'm not saying this is a good plan. I'm only going to talk about me. Um, when I put a trade on, I'm not thinking about the right wrong. I'm thinking about, is a trade showing up in alignment with my plan? In other words, do the conditions suggest the long side is the preference versus the short side? Does this buying here suggest to me that maybe this is too low? Because this was my retail price. Think of this like a store. And if I leave it, then maybe I'm going to come back and check this price, which is the highest price that we rejected. So if too low, too high, noise, long. So let's say you got long here at the IB or the IBF. This is your long, and maybe you get stopped out. The point I wanted to say to you guys is, if I put a trade on and take a stop, other than emotionally how I feel about it, I look at it as a probe, because I don't know where the outside is. Do you? So I have two choices. If I put the trade on here and get stopped, and I get another trigger, right? Here, I put it back on again, or I buy it here and get risk neutral, I'm going there. Happens to me. Why wouldn't it happen to you? Or I come out here and I know I'm in this zone that I can chop. You see, that was the point I was making. This. So you got to look at this and go, well, what's this thing here? Well, there's low volume. That's why we came down in here. And it doesn't have to, but you need to understand this is the outside edge. And all we did was come under it, and now we're trying to get here. That's basically mean reversion. So that's my favorite trade, not the stop, that I might take and you might take along the way. That's just overhead and cost of production. But it's the trade we see most often. And the idea of the trade we see most often is, if you can vet mean reversion, develop a plan around this behavior, take it every time it shows up after you've researched it, learn the nuances of it and the challenges of it, you can build a potential sustainable practice. That's my belief. Now, the thing is, most of us want plug and play because we all have FOMO and we're in a hurry. None of us want to take stops, I understand, but every business has overhead and cost of production. It's just a mental state. I mean, we have to think about, what are we doing here? We're taking risks to get an outsized reward. We're in an environment that's random. We have no control over what happens here. I don't know right here if some trade desk is going to drop a couple thousand contracts, or a piece of news comes out and boom, out I go. If that happens, what am I supposed to do about it? What I'm supposed to do is follow my plan and then see what happens. And also develop an understanding of market mechanics. Why might the market come back here? And why might the market take this out? I can give you answers to both, and I can't tell you what will happen. This is the retail price that we left. We already left this one down here, and if it's too low, we get the opportunity to check what's too high. That's this thing. There's also another piece in here. We are not probably going to fill the gap, though I can't say it won't, but I'm going to step out on a limb and say maybe not. I also know the shorts have their stops here. So what we might end up with here is, after we got responsive selling and we pulled the rug on the late longs and weak longs from Friday, now with a higher time frame uptrend, we can come here, and the shorts have their stops now here. This sets up the target we had earlier around 47, not a recommendation, if we come out the IB. and then maybe out here. Who knows? Not my job. My job is to attempt to get an alignment, to take my stops, and to wear a helmet. And just basically what I do is the P&L is the outcome of following a trade plan with an edge. It is not the last trade or the next one. It's an edge. So the fear that I feel of uncertainty, we all feel. I still feel it after 47 years, or almost 47. I think it's 46. I don't remember anymore, but 46, 47. And I still emotionally am triggered. Not the way I used to be, but I still feel it because it's part of it's all of us. We all feel the same stuff because we're wired to avoid risk and uncertainty. Well, what's certain about this right here? Nothing. What was certain over here? Nothing. What about there? Nothing. Nothing is certain. So if you can't have certainty, the best you have is maybe. So the way to convert maybe into something tangible, so it's not just emotional, is statistical probabilities. That is the challenge, my friends. It's nothing more than that. If you knew that over X percent of time, that when you have a reversion trade and you're trying to go here, that there's a probability of getting risk neutral before taking a stop, and that probability is positive, a positive expectancy, does that give you the courage to put the trade on, even though you'll take a stop? You put it on here, maybe you'll take a stop. Put it on here, you'd be risk neutral. What's the difference? You want to know the difference, don't you? How do I avoid this but get this? How about you can't? How about what you need to do is look at it as a probe. And as long as the conditions favor your trade based on statistics, this is what you're trying to do. Now, is this worth it? Now, let's assume you took a stop here. And what is a stop? A couple points. If you put this on, where would you be already? Well, you'd be risk neutral. So the worst that happens is you had that stop, and the worst that happens with this one is a scratch. If it keeps rolling, then you're looking for this, and you could be done with the trade, or you're going for this for your scale right here because the sellers were there. So you can structure this thing to scale here. If you got long here, because your sellers took control right there, and there's the sweep. You could be right here. You could scale. All these you can figure out, and then you're doing this, maybe, and you have to manage the trade. All of that is up to you. You can learn this in TraderLab, but you got to start somewhere. This is where we're trying to go. This is the mean. It's called mean reversion. Underline the mean. We're trying to get there. And then if we can get here and then potentially come out the top. Not a recommendation. This is where we're trying to go after this to squeeze the shorts. And that would set up something called a neutral day. And I think it's logical to come out the top, not a recommendation. Why would we come out the top? Because we blew out the weak longs and now we have shorts. And the market will go into the stops on both sides. So let's see what it does. Are you guys with me? How do I trade Bookmap? Well, come to TraderLab. This is kind of how I use Bookmap. I mean, I use it to sweeps, order flow. I watch the delta. I'm looking here. By the way, notice the selling. As long as we're talking delta, here's my heavy selling. Where'd the market go? Well, didn't go down. Buying here, selling, buying, heavy selling. What's happening? It's not going down. That's delta divergence. Buyers, market's going higher. I get my sellers here. What are we doing? Nothing so far. More buying. The buyers, you'll notice, when you get the sellers, they're not getting traction. That's divergence. You guys know divergence. Sellers, more sellers than buyers. What happened? They didn't even get under the buyers. Isn't that bullish? This, and where are we trying to go? Up here. Uh-oh, got to move something around. So let's see if we can get here. Now, what I do, again, not a recommendation. I don't put my order there. I give it a couple ticks. It was always in American baseball. They used to always eat peanuts and throw the shells on the floor. Any of you guys ever been to a baseball game? I don't even know if they still do that, but this is back in the Stone Age. And then the saying was, leave some for the sweeper. Are you guys with me? Hope you get some from this. This is Trader Lamb. And guys, there's no holy grail, no secret sauce. What can I tell you? This is not hard. What is hard is how we behave. This is an example of these PDFs I'm talking about here. Okay. And you can grab these. They're in the Trader Lab. There's 60 of them. Some are like order flow phenomena, which you guys were just asking me about. And again, you have to reverse engineer them. There's no secret sauce, no holy grail. Wouldn't it be nice? Target is up here. This is mean reversion. So what is the primary trade to learn? This kind of thing. Here to there. Can you build a career on this if you vet it and have the discipline to wait for it? I'm going to say I believe so. I can't say you will, but if you can learn this and discipline yourself not to respond to FOMO, because that is, your psychology is going to be your biggest obstacle, in my opinion. Okay, so there's your target. Is everybody okay with that? Yeah, Tapish, that's correct. So we're looking for, again, not a recommendation, this. Remember this. I know this is complicated. The market goes up to go down. The market goes down to go up. Why does it do this? Now you're gonna roll your eyes back, but here's how this works. If the buyers are in this leg, their sell stops following them. When we get the counter rotation, we're going into the weak retail longs. When we get this rotation, we're going to get shorts here. Well, when you have a down leg, there's buy stops. They become the buyers as well as new buyers. And now we have this. And where are we going? Where's our stops? This is a weak high right here. Right here. Weak. So what's the plan? Not a recommendation. Out the top. And then put your helmet on, strap in, and see what happens. And the next structure is out here. And if we can clear there, here. So these are the targets. It's not a recommendation. We never have to do any of this. So let's see what it does. Okay. So this is called structured trades. And the idea of a structured trade is to give you something to build. So it is in a random environment. In my opinion, I'm only giving you an opinion, you need to know what you'll do before it happens. You don't know when it'll happen, if it'll happen, or where, but you wait for it. It's like waiting for a bus. And you're going to have a hard time doing that because you're going to see these random rotations all over the place. And in hindsight, the lunatic under the hood, I call Hyde, is going to be saying, you could have done this, you could have done that. I knew it was going to do, And the reality is we don't know anything. And we see patterns all over the place. We're very much pattern oriented. And many of us develop trades based on patterns that have no edge. But they do show up. But if they don't have a positive expectancy, you're still going to lose. And most developing retail traders do that, and they lose, even though they have random winners. That's the problem. A dartboard has random winners. We had a magic 8 ball on the trade desk years ago. And as long as somebody didn't throw it at a monitor, which did happen, or bang keyboard on the desk, you should be in an environment with traders, which was kind of challenging. But when I was on the desk and I was helping other traders, the impulses and the emotions run so high that I believe, from what I've observed, because I've seen over the years traders I work with and that I coached, and who really I thought had a pretty good shot at creating a career. And what their biggest obstacle was not learning how to trade. It was throwing everything away based on emotions, and the emotions are chemically based. You'll never learn about yourself until you come to the trading business. You never had to understand impulse, cortisol, dopamine, chemicals that are released in your brain, hormones. All this is going on under the hood. And that's what causes us to chase the market, like to sell this, buy this, sell that, and to go, oh, I'm missing it, and buy it here, or something. That's our wiring. So being able to get control of yourself, it's not one trade, guys. In a career, you're going to have thousands and thousands of trades. It is one trade, significant, but everything goes out the window because we're all right here. I think of it like if you've ever had a dog and a dog chases a squirrel. That's its instinct, its primal wiring. FOMO. Bring the food home to the den. You know what I mean? The same thing for us. Same wiring. Anyway, this is your reversion. Now, do you think if you can learn this, and you will take stops, right? Buy here, take a stop. Buy again right here. Successful. Why? Random. So where's your responsibility? It's knowing where your edge is and accepting that there's a random distribution of outcomes and nobody can pick anything. Especially in this because of the low volume. It's like, this is like the Grand Canyon, and this is like trying to pole vault across it. It's not a good example. Don't try pole vaulting. If any of you guys been to the Grand Canyon, you've seen that thing. It's like beyond, like how did that happen? Every year, tourists go off the edge of the Grand Canyon, taking those selfies. It's like, how close to the edge can I get? I've often wondered about why would you do that? So this is where we're trying to go, and then squeeze. So we have buyers up here, buy stops, and we have what? Buyers. And the leg before. Buyers, pull back, sweep, IBF, long. See why the IBF, so we had two trades from the IB. We had the short IB continuation trade down to the overnight mid, luck of the draw. And then we turned around and now we get the IBF because the higher time frame is up. The IBF, I called it the IB failure. I made the name up. Who knew? Just like I made this stuff up because I started trading in 1980 and I learned market profile in the mid 80s from Peter Stottlemyre. And if you look at the literature, he created it. And it was licensed by CBOT. So I spent a couple days with him and learned it. And then couldn't do anything with it because I didn't really understand how to use it. I don't mind telling you that because there's no plug and play. You really got to get in there, get your hands dirty, and understand what is happening. So here's a sweep. Possibilities, counter rotation here. So what is this? Buy stops. Do you want to get short here? It's up to you. Me, not so much. Not a recommendation. Market could do the Acapulco cliff dive from here. It always can do anything. So let's see what it does. You guys have questions? I got about 10 minutes. Hope you're getting something from this. This is a Trader Lab. Hi, Nani. What's my opinion about Gamma and Gex? I think it might have a place. Um, I've looked at it. I don't use it in my trading, but I know many traders do. I'm kind of minimalist, and this is just a personal choice. I before those tools became available, traders were profitable and knew how to trade. Um, I find, and this is just personal, again, I'm not saying that they're not a good option or might provide insight. I want to be very clear about that. I think any tool has to be researched. Not only, and here's what I mean about researched. Does it create conflict or does it support? I'm a minimalist, so, I'm always talking about anchored inputs. When a variable comes in, like an option, you know, or gamma, where we might anticipate, market maker behavior, um, how does that fit into it? And is it a variable, a random variable, and how do we put that into an edge? It's almost like Fibonacci, if you guys remember that. It's random. Does it actually provide an edge? Anyway, there's our next target. So where was our long? Let's come back. And guys, if you're visiting and you're visiting the lab today, I hope you're getting something from this. We had our initiative buyers. We had our sloppy area for chopping because it was low volume. So we came up here. This is a potential long here. You might take a stop. This is a potential long here. Then you're getting risk neutral before this, which would be here because the sellers dropped it here. So then you'd be risk neutral. Your next target is the yellow line here. Your next target is this. And then you wear your helmet. And then after this, it's trade management and possibly here or higher. That's Trader Lab. This is called mean reversion. Again, to answer the question, what would be the trade? This is the trade. Now, here's the thing. What is the objective of trading? I know it's not a video game. And I know the influencers and all the wonder dogs out there, are going to show you how they made $500,000 in 4 minutes. The business of trading is exchanging intelligent risk for the potential for outsized yields. So let's assume you got long wherever. Let's assume you took a stop, you get long again, and you're long at 68.15. 16. 68.16, you'd still be in this thing. Is that going to work for you? This is what the Trader Lab is about. I'm not saying this is a good idea. I'm not saying you'll ever be a successful trader. It takes work and discipline to actually do the work. We're so driven by FOMO that we want to grab something off the internet or even here and just start pushing the button. That's FOMO. If you're interested in building a career in a sustainable business, you're going to probably have to dismantle not only the things you do that don't work, that don't have an edge, but also the psychology and the emotional stimulus that causes you to do things that are not in your best interest. That's going to be the hardest part. Do you think you can learn one structured trade, just one? My challenge to you is, can you learn one and become an expert at it? Not 3, 4, 5, because you won't be expert at any. Become expert at one. Prove to yourself, I call it proof of concept. It's like a pilot program. You ever build a business, but you want to manufacture a widget? So do you build a whole production line or do you do a proof of concept? Get the tolerances down. Fix it, tweak it, tune it before you go into mass production. You can't do one and you can't produce one, you'll do none. You have the discipline to do one. See. That's my question to you, and it's a friendly challenge from the Trader Lab and myself, because everyone in the Trader Lab has walked in your shoes. We have some very successful traders who've gone through Trader Lab. We have other traders that are still developing, and I'm still a developing trader. Um, doesn't matter how long you've been trading. What matters is everyone has winning trades. The dilemma is randomness. Well, everyone has winning trades, but if the winning trades don't have a statistical edge, you're still going to lose with them. That's why curve fitting doesn't work. And we've all done it. I did it on systems. I just did it better. But initially it was more indicators to create more certainty in more time frames, right? More certainty. We're risk to avoid risk. That's what we want. And why do we want it? We're wired to avoid risk. Well, suppose you can't have that. Then maybe you need to change your objective, and that is to find edge, just like the casinos do. See, there's a proven business model out there. It's called gaming. So I don't know why we're not using what already works. What is gaming? Casinos only play games with an edge. They play them exactly the same way. They have anchored input. If you just take a proven business model, and by the way, they do pay the gamblers. Don't forget, we also take stops, same. If we have an edge and we skip the gambling on our side of the table and we still pay the gamblers, can we get a net? Well, works for the casinos. So let's not try to create a fantasy video game. Let's look at this as a business. That's what Trader Lab's about. And then there's a lot of additional education that's available to all of you at no cost in the Bookmap ecosystem. There's a link in the bottom of YouTube. Imagine this. There's educations on stocks, large cap, small cap, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. It's all available at no cost, and you don't even have to be a Bookmap subscriber. Now, someone was asking me the other day, why would Bookmap do that? What's the catch? And I said, well, there's no catch. You don't have to be a Bookmap subscriber, so what's the catch? I said, have you ever thought about that you make an investment in your potential career, throwing dollars at the market, maybe not having any idea what you're doing, but you put dollars and time in? What would happen if a company, instead of selling you a product which you may never learn to use, but you don't have the other pieces in place, so you don't sustain yourself in the business like most retail traders don't, over 90% fail. Suppose there was a company that had a terrific product, but they were willing to invest in you. If you're successful, they're successful. It's an interesting idea. So when Bookmap asked me if I would stream a number of years ago, I created the Trader Lab because of what I went through in my development. Too long, too many dollars, and this is when you had to actually get your checkbook out before we had these funded gambling accounts, you actually had to put your dollars out. And I don't want to even tell you how much it cost me, because I always had random winners, but I didn't understand edge at the time. Early on, I started in 1980. And in fact, I even shared an office with George Lane. He created stochastics. See, I thought that was the holy grail. Look at that, the line crossed. So I kind of went through all those stages of development and kept waking up in the same place. So if you're working hard and waking up in the same place, you might want to visit the Trader Lab. There's no cost for it. There's a link in the bottom of YouTube. There's a library of webinars, some up to 4.5 hours long of real-time narration, as well as the document section and the Trader Lab community itself. This is what it looks like. There's a lot going on in here. You can see everybody is working together to help each other get better. And don't forget the library of webinars. Thanks, Ned, for curating this. This is the primer. Start with that one. It's got over 34,000 views, and there's a whole bunch of these things that you can look at. Multiple time frames, stop gambling, start winning, targeting new all-time high. How do you do that? Is there a holy grail? Well, no, but how close can you get? Use the link in the bottom of YouTube, and please leave a like on the way out. Appreciate you visiting the Trader Lab. Look forward to seeing you tomorrow. If you don't have an edge or a plan, it might make sense to take a deep breath, a little time out, come to Trader Lab. Maybe it'll be a good place for you to visit on your journey. Thanks again, guys. Appreciate it. And please don't forget to leave a like on the way out.